Nvidia earnings were great, don't get it twisted here. There was a strong double beat and raise with confidence from Jensen declaring that this is not an AI bubble. However, there really wasn't anything new that we didn't already know from the GTC Roadshow just a few weeks back. All those partnerships, they just rehashed that. Pair that with the more obvious slowdown in financials, communications, and discretionary, and I don't think it was quite enough to save markets here. Yes, we're off the lows in the after hours, but I don't think we're headed back to brand new all-time highs so easily. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 3 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight with a closer look at the SPY daily timescale, and the first thing that we have to acknowledge here is that the daily trend has actually flipped to down as of the move lower on Tuesday. We currently have highs, we have lower highs, we have lows, and this was acting as a higher low in the daily trend count, but look at what happened on Tuesday. This undoubtedly is a lower low in the trend count, and therefore it is possible that as the market rallies, it could be in search of just setting a daily lower high. And the reason I said in the intro that I don't believe we're headed back to new highs so easily is because even in the after hours, we are trading at 670, not over the bearish engulfer high. So again, don't get it twisted. This is a pretty solid gap up. We're currently trading near the 50 SMA in the after hours here, climbing higher as well, but we're still underneath the location where on the daily time scale, there's a clear development for a lower high, which will just keep the daily trend in the downward direction. We're still underneath the daily 20 SMA. We still don't really have an opportunity here for a potential follow-through day, which should happen on the 4th to 7th day if you follow the classic cancel methodology from Mr. O'Neill, of course. We just don't have the correct timing. This would be day 3 after a major low, and we're also underneath that major bearish engulfer high zone between 674 and 675. Now, I will have to change my tone undoubtedly to perhaps a little bit more neutral if the market opens here tomorrow, rallies, and closes over all of these levels. Like, I can't really maintain too much of a bearish stance, because at that point, right, then the pullback becomes like this, higher low, and you do not, this is the thing, right, and if you've been trading index products, you know this, you never ever want to overstay your welcome on the bear side of an index product. Individual equities, sure, they have the propensity to move lower, but in an index product, absolutely not. So I would change my tone if we start to see something that looks like this on a more substantial reversal over the bearish engulfer high at 675 to 674, but we're just not seeing that yet in the after hours. Again, we'll give Nvidia all the credit it deserves. It was a solid beat and raise, but it's not enough to cause a gap up to here. We're certainly not gapping up over the 20. We're not gapping up to all-time highs. Neither is Nvidia all by itself. Nvidia is moving higher in the after hours, but it's just hardly at the upper edge of its market maker expected move, and it's nowhere near the highs of that GTC day where it blasted off the new highs on all of the partnerships that they announced. So I'm not convinced on the index product SPY here that we are ready really to go back and revisit the all-time highs as long as we are underneath this daily level here. And once again, the key takeaway, aside from the Nvidia gap and everything that's happening after hours, is that the daily trend did flip to down via this lower high, and now on Tuesday confirming via this lower low. Monday, we had an equal low. Tuesday, undoubtedly lower low. This is a bearish downtrend on the daily timescale. So if a lower high were to emerge at this location here, rotate back down to the lows, then of course everybody will start talking about the Man Ray pattern, and here's our right shoulder underneath the 20 SMA, underneath the bearish engulfer high. So that is the bearish forecast, and we already talked about what would be required if I'm going to change my tone. You really need to see some kind of strong close at the high of day tomorrow, and then possibly some kind of pullback that looks like this to end the week, and even into early next week, you'd have to really start building some degree of confidence up against this low. And even at that point, I'm not much of a trendline trader, but you could come in here and do something that looks like this. You could say that the downtrend's not officially broken until you're over that. Now, I'm not a big fan of trend lines, and I don't want to be any more bearish than I have to be. But the reason I'm taking this approach is because I don't see the supporting evidence primarily in the S&P sectors. The broader based market is not participating as well, per se, as Nvidia in the after hours. Financials are unchanged, and I don't think you're really going to get that follow through personally unless you have all things firing on all cylinders. let's take a look over at the hourly timescale and see what's going on here from a trend perspective. Like this morning, this entire rally was completely taken back. It was a rally on nothing, and I'll just quickly pop over here to the market internals as the market was screaming to the upside. Like if you were watching the bid this morning, relentless bid, up, 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 right? It was on nothing. It was short squeeze in semiconductors ahead of Nvidia earnings, de-risking the shorts. Think about Michael Burry. Think about SoftBank unwinding their position in Nvidia. Think about all the bearish sentiment around the AI trade coming into this earnings announcement. This, in my view, was de-risking Nvidia in particular ahead of the release this afternoon, which bid up the semiconductors as a sector overall, which is a huge chunk of the S&P 500. And then as soon as that covering stopped, the market just faded off, right? You could see here, no participation on the volume flows early in the morning. It's not like you had up and away and nice solid bullish inflows on the session. That wasn't the case at all. You can see the same thing here in the advanced decline line. We're not even close. I mean, you opened under the zero line on the substantial rally, or quote, substantial rally. We'll put that in quotes for sure. You hardly even got over zero. It wasn't even positive. Never mind anywhere close to trend higher zone. The index score did not get double digits over here. And the tick, the biggest and most easiest indication to watch, hardly printing anything positive, upper, no slams up to 750, 650, nothing. I think the high tick of the morning in there was right around 500. So this rally was not to be trusted with a 10-foot pole, and I think that's sort of being reflected in what's left ultimately in the aftermath here. So all of this fading is, to me, just another indication that we don't really have new money buyers stepping up in this market. This was, short covering, short squeeze at best, and I think it's really up to tomorrow in the morning session to determine whether or not institutions will step up and buy this thing and say, great, Nvidia earnings are going to fuel the AI trade higher. It's, music keeps playing into the year end. Fine. If that's the case, then we'll go gap and go. One thing that I would encourage you to pay attention to here is if we do go gap and go and we don't close any of this, we'll carry this forward. But an unfilled gap just tells us that sellers aren't doing their job, right? This is thin structure. There's nothing that's going on there with substantial action intraday yet. And therefore, if the gap is unfilled and if we close up here, if we see this gap and go support above, then again, I don't want to overstay my welcome on the bear side, but as of right now, I still think the more compelling argument is either the gap fades and we just wind up closing inside of today's Wednesday range tomorrow, or we get a little bit of a rally, we wind up here, and then this just ends up turning into a lower high, right? And that's in service to the daily lower high we were just talking about, which is fine. So I'm not convinced. I'm unfortunately, I would love to be bullish into the year end and Christmas rally and oh my goodness, everything's so euphoric. But unfortunately, the market sequence and the trend that we're in right now isn't quite allowing me to be there all the way on that bull side. So main thoughts surround that 674, 675 area and the potential still for a lower high. It's not all adding up to me just yet. I'd love to be proven wrong, but for now, I'll just draw on the base case, right? That's a base case. This failure back down underneath previous day's high is a base case. These things make more sense to me rather than, oh my goodness, we're here and here. Back off to the races at all-time highs. This, I would think, is much lower probabilities given everything that we'll walk through really right now. So we already talked about one of the major data points, which is just that at the exchange level intraday today, new money buyers were not stepping up. You could see this as well if you jump on over to our market profile. If we jump over here, there really wasn't any meaningful shift in the value area. You could see value areas here in the upward direction. If this was like a strong rally and oh my goodness, everything was going to be true up here at the highs and it wasn't going to fade, value should have built out up there and it just simply didn't. You can see point of control is actually lower here from a market profile perspective. If we just jump on over to the NASDAQ, I do want to take a bit of an abbreviated approach to tonight's episode since we streamed Jensen and Friends on the channel here. We don't want to be up too late watching these markets. Qs, same thing, right? We'll just sort of pair this together as a dual analysis, S&P and NASDAQ. It's the same idea where your bearish engulfer high has not quite been retraced yet. You can see here in the after hours, you're trading about 610. So we're getting pretty close, and the open, in my view, wants to quickly offer a look above and fail. Back underneath opening print, gap rules will be in play, looking for the gap close, and then battling for some sort of price acceptance inside of the range from today's Wednesday session. You can see the same thing from the trend count, lower highs happening here, and lower lows undoubtedly changing the daily trend to down with the Tuesday low. If we drop it down to the hourly time frame, rinse and repeat. Again, you're opening right around in here. Look above and fail is a primary base case. Something that looks like this also makes quite a bit of sense. You could easily just fail off of the open as well. You don't have to look above and fail. That would be a little bit more actionable though. If the market does attempt to rally and hold in here, I don't even know that I would be convinced. in this zone right there. If you're still under your daily 20 SMA, 617.50, you're underneath this 3-day balance range there where the breakdown really started to get more aggressive. That led to the gap down, right? If you're underneath that, I would still go out on the daily chart. Although you'd be over the bearish engulfer high, I would go out on a limb and just say something like, still very clear that you have a lower high. And that probably aligns better with the trend line. Yeah, dare I say that's the trend line lower high as well. So I'm not sold until you're really over 617.50 on the QQQ. Maybe this starts to neutralize my bias and it's less down at that point. But for the most part, still looking for a lower high specific to this NASDAQ product. And the other thing to keep in mind as well, we'll quickly go over to the NASDAQ market internals. I just want to talk about, though, how Nvidia, we'll look at Nvidia's chart because, it's crazy. We're talking about Nvidia earnings. We haven't even looked at the chart yet. Volume outflows, advanced decline line is weak. Cumulative build is bearish on the tick, technically over here for the NASDAQ. Again, you're going to open slightly higher, but you didn't have new money buyers stepping up ahead of the announcement. Tomorrow's open is really going to hold the secret as to whether or not this market is going to digest and rally, or if it's just a lower high in the making. I do want to throw on the earnings market maker expected move here just so we can take a look at this. The thing I want to point out is that as Jensen was speaking, the market started to pull back, right? So this is kind of like peak post-call, post numbers announcement high. It didn't even make it to the upper edge of the market maker expected move, which is 199.29, and the call wall up there at $200 is also going to mean that there's likely going to be some decent amount of stock for sale tomorrow morning, right? There's no need to maybe have some hedges on from the market makers who might be net short calls up there to unwind that, right? They're just going to sell shares if they were buying shares to hedge, and that's just more downside pressure for the stock ultimately. So on the move higher over here, this was definitely more compelling when Jensen was rattling off all those partnerships and we're partnering with this, Eli Lilly, Caterpillar, Palantir, Nokia for building out 6G, you name it. They were offering a partnership, OpenAI, like all this different stuff. And yet the market couldn't even make it to the upper edge of the market maker expected move here, which is clearly below that level. So I'm not convinced. Like the numbers were fine. Don't get me wrong. It was fine in terms of the numbers from Nvidia. Double beat and raise. Once again, that's really strong stuff. It's groundbreaking what they're doing. Like, let's not kid ourselves. It's one of the coolest companies in the world reporting, I think it was like 74% margins on, $50 billion of revenue. Are you kidding me? Like, insane stuff. So it's a great company. I'm not trying to poo-poo Nvidia. I'm just saying for the broad market overall, I don't really think we're poised here for this glamorous return to all-time highs. Everything's fine and we're out of the woods. What I wanted to bring up as a parallel is maybe just Palantir earnings, PLTR. If we take a look over here, they reported blockbuster numbers, right? And they unfortunately were not gifted a gap up, but the gap down instead. So is it possible that with the reiteration of what the market already learned from a couple of weeks ago from Nvidia, is it possible that the gap up gets sold into? I would tend to think that's within the realm of possibilities. Once again, going back to Nvidia, just kind of gapping up to what? Resistance under this overhead supply. At this point, it's less about the actual numbers of Nvidia's report, and it's more about just the inventory position of the players in the underlying name. And anybody who's trapped from up here is like, oh geez, I thought Nvidia was going to all-time highs again. That's not really what we're working with overnight here. And any open that is underneath this pretty much just 200 figure, I believe is more likely to get faded rather than just a big rally in the upward direction. So the AI trade might not be over, but it's certainly slowing. I think most of this good news has already been priced in for the most part. So yes, the stock's gapping up, but I've sort of built my case as to why I don't think it's going to be the strongest thing in the world. You could even use AMD as a proxy also. Opening on the gap down, rallying, yes, but then fading off the gains again. Now, Nvidia is not AMD and Nvidia is not Palantir. Nvidia is a much stronger company, just in terms of numbers than these two. So it doesn't have to follow this same plan, but I'm just pointing out, again, that the point of the exercise here is simply to say just because there's a beat on the numbers does not mean this must go in the upward direction. Once again, I'll say it one last time. The inventory position of the players matters more than the numbers in the report in the short term, right? So that's Nvidia. I've sort of babbled around this long enough. I think we continue along into some supporting evidence. Let's maybe look at the Russell quickly. Why not? Clearly, Russell's not really participating. Nvidia is not a part of the Russell 2000, at least on the small cap side. So you could get a counter trend rally in here, and what's that going to offer you? Still a lower high on the IWM. There's nothing really changing about this daily chart here. Let's just go back to a daily and go to IWM. We've gotten a breakdown from this overhead supply. Clearly, bears are in the driver's seat. I just don't see an argument for a broad-based market rally, which is sort of a great segue into the next point. Let's just jump into those sectors. In terms of weekly performance, I mean, healthcare is the shining green spot. It's the only green spot that's defensive, right? At the bottom end of the barrel, it's discretionary, it's energy, it's financials, most importantly, as the second heaviest weight sector. That's a problem. Tech is down there at down 1.57%. Now, this stuff's going to change, right, tomorrow. But if we just take a look at these sectors, what we'll see is like XLV healthcare, great looking bull flag up here. That looks fantastic, but it's defensive. Look at the strength of the trend here. Awesome. If that breaks out, great. Upside pressure for the S&P. Going over to the XLY though, take a look at this. I mean, again, I can see here that it's slated to open slightly higher at 225. Look at this chart. This is horrific. Horrible. Daily double top, right? We had talked about the threat of this balancing off in here, and it finally, like as soon as Monday, it broke down. It gave you the warning sign on Monday. It said, guess what? Neckline snapped. Tuesday, kiss it goodbye, right? So this is a pretty rough looking chart, and being a heavier weight risk on component of the market, this is some of the logic as to why I don't think your S&P is just going to float magically back up to new all-time highs. Energy is lightweight. I'm not leaning on energy as being the driver to new highs in the S&P. If you look at financials, another ugly one. Here's your overhead supply. Really, earlier this week, Monday's session, abysmal, right? And what do we know about the components of XLF? Let's go to Goldman Sachs, right? Brought this example up a number of times. There's the headline. Largest M&A fee in history, $110 million on the EA sale, only to fail the all-time high breakout back into the range. You know, just horrible looking chart. You could say the same thing about Morgan Stanley. Failed all-time high breakout. JP Morgan, failed all-time high breakout. Wells Fargo, failed all-time high breakout. Citi, right? Never even made the attempt at the all-time high breakout. So all these things for financials, which is a big part of this S&P 500, second heaviest weight sector right now, does not look good. The only thing you could say is that they parked themselves at the daily 200. Maybe you're going to hold on there and go for a little bit of a counter trend. But in terms of like being pressure for S&P to go to new highs, I don't think so. If we look at the XLK, let's see where we are relative to that engulfer high in the after hours. We've got 286. 286 is not, it's like hardly over the 50 SMA. So rally rejections here, certainly stage left, head, right shoulder. And again, I don't want to be premature to the head and shoulders. I'm not calling for Armageddon breakdown just yet, but the left shoulder, this lower high, is still definitely on the table, coming from undoubtedly a lower low on Tuesday. Remember, like it's funny, we joke about being called the perma bull of YouTube, and now probably on the back half of this move we'll be called the perma bear of YouTube. I don't want to stay any more bearish than I have to. I just read the chart in front of me, and this lower high is still a valid threat. We've seen weakness in some of these heavyweight risk-on sectors, financials, discretionary, right? Let's take a look at real estate, lightweight, so we won't spend too much time here. Flat, but maybe breaking down from the balance range, bearish pressure. Industrials, similar, flat at the bottom end of the balance range. Maybe if it breaks down, bearish pressure, hard to say quite yet. If we look at consumer staples, horrible. Horrible. So much for a defensive rotation that's going to keep the market afloat. Look at the lower high here. It's terrible looking. If we take a look at materials, lower, right? We could tie this in with, not that it's perfect, right? But Home Depot destroyed on earnings here. That's not really a good look for your S&P 500. Lowe's did a little bit better. A little bit better on Lowe's, slightly higher. XHB, home builders, still breaking down here. And the big threat and concern is that you're underneath the major double bottom neckline here. If you really start to spend more time sub 100 on XHB, cyclical side of the economy is just clearly shouting in pain, like, oh my goodness, this is not great, right? Let's keep going here with semiconductors. Let's just speak about the one sector to rule them all. What do we have at 346.75? You're slightly above 350s as of right now. You're just a hair above that bear engulfer high. So you could get some neutralization. I mean, it's possible to neutralize there, but some of these other sectors that make up a good chunk of the S&P, not quite 30% like the XLK, but XLF, XLY, as we'll see XLC, let's just move to it. I mean, look at this chart. You're just blatantly in a downtrend. There's no hiding from that. Underneath this low, sayonara. And again, I can see that you're like mildly higher, a couple of pennies higher in the after hours, but the general trend structure here has clearly changed, and it's not worth, sticking to some sort of like, I'm just constantly bullish because I want to be bullish. The charts are telling you, no. This is a different environment that we're in at this point. If we look at utilities, little bit more balanced in here. I could see a break of these lows being a little bit of a headwind, noting that utilities have acted strong recently. If we look at TLT, no big breakdown in here, even on the FOMC meeting minutes, where we learned that a lot of participants really said, nope, December probably doesn't give us a cut because we just simply don't have the data to back it, right? So a little shocked that this didn't quite continue moving lower as aggressively, but I'd keep an eye on it into the end of this week. That is what we've got out of the sectors. Let's quickly blast through some of these ratios to check risk on, risk off. This is no longer acting as the glue, right? This does not look great. This doesn't look great. This doesn't look great. This is technically defensive, so I'll put D there for defensive. This is not helping out. It's testing that 50, and this is kind of neutral here on the XLU. So we don't have risk on posture. If we look at the A set, none of these are over the 50 SMA anymore, so this is a big deterioration on the risk appetite. If we jump into the B set, you could see here that we clearly have a rollover, and this just generally means gold is performing better than the S&P 500 still. Bitcoin trying to hold on to the trend line. I'm not sold on that idea yet. You're between two major trend lines unless you're using a log scale, and then the TLT ratio to the S&P, or invert of that, has not quite broken out to a new high. So risk appetite generally is not all that compelling for a big long argument to say, okay, let's head back to all-time highs here. This could change tomorrow. Should Nvidia prove it? But as of right now in the close, sentiment is not all aboard the long train. Let's continue along with the dollar. Dollar slightly higher here. Again, I was a little shocked that rates didn't also move higher in tandem on that, specifically with some of the FOMC meeting minutes commentary. But, maybe it's a matter of time. You could certainly make the argument for this. Inverted head and shoulders, long here. Not that you would just buy rates, but you get the idea. You would short bonds. Over 4.2% on the 10-year seems like a reality based on the pattern, as well as what we know about the Fed and sort of the positioning there. If we take a look at the Fed tracker, which is sort of going to be a mirror of this, we are very likely, let's take a peek. I know we skipped market profile for the NQ. I'll quickly show you that if you're interested. You could see that value was, again, unchanged from the prior day. Then we'll just jump into the Fed Watch tool. You can see here we are currently sitting at about 51.4. I can't tell if these are old odds. I think they are. Let's go back to the probabilities tab here. Yeah, there we go. Even more painful. 67.2% odds of a pause after those FOMC meeting minutes were released. That's up in terms of pause odds from that 51 we just saw, which was an unrefreshed page from this morning before the market opened. As we look at the earnings calendar, it's nothing we don't already know. Nvidia, the main event, is out of the way. Webull will be interesting after the close on Thursday. And if we just go take a look over at the actual results of, where do we want to go? Let's start here perhaps. CFO commentary. There we go. There's our revenue coming in at $57 billion. For this third quarter, which was a beat from a 54, I think it was the forecast. Yeah, 54.9, you can see that right here, 54.9 billion. And then on the EPS front, if we just flip over back to this tab, EPS of $1.30, which was up from $1.26 as the expectation. Gross margin also improving here, 73.4%, up from 72.4, just a cash money printing machine. Right? Just unbelievable stuff from Nvidia. So the point of this analysis isn't necessarily to poo-poo Nvidia. Nvidia looks great, right? I really like the way that the numbers came out. That great beat and raise, confidence from Jensen. Trying to think of a couple of other highlights from the call there. Let me see if I can pull up. I took a couple of notes. One thing he said, which was pretty interesting, right? This was in the commentary afterwards, was that the A100s from 6 years ago are still running on 100% utilization, which was basically just saying like, hey, Michael Burry, your depreciation thesis and shorting Nvidia and saying that we're overstating our value is completely wrong, right? So that A100 comment was pretty noteworthy. They also talked about Blackwell chips, the first ones being made on U.S. soil, kind of cool there. Margins looking to improve as they ramp Blackwell next quarter, looking for 74.8%. And I think Jensen really just drove home the point that they're building one architecture that does it all, right? NVIDIA wins on generative AI, it wins on agentic AI, and it's going to win on physical AI as well. So pretty interesting stuff. If you look down at the segment here, in terms of data center, really strong numbers. That is where a majority of their revenue comes from, of course. I mean, it's probably, what is that? I'm not great at mental math, but that's got to be something like, 80%? give or take, roughly. So pretty huge there. We did see a little bit of a contraction in gaming quarter over quarter, then some pretty slow growth there in OEM and automotive. That's interesting considering FSD on automotive. I would have expected a little bit of a ramp, especially more so with the comments from Elon Musk, right? XAI in partnership there, building out, this new Saudi Arabia data center. Oh, the other thing, by the way, which I think is worth talking about when it comes to Nvidia earnings, is that they can see the $500 billion in terms of new orders sitting in the pipeline, which is like unheard of. Name another company with $500 billion of orders just waiting for their latest products too, right? The Rubin and the Blackwell, rather than some of the older stuff. All of these numbers do not include the China metrics, or they're not expecting Chinese revenue. So just understand that in the back of this context. If China opens back up, that would just be a huge unlock for, maybe I shouldn't say huge like that. You could look at prior segments. It's not a massive component of revenue, but the market would perceive, oh my goodness, the growth story can continue to expand in that foreign market. So just some commentary and color there on the state of affairs from Nvidia. Let's maybe flip back on over to the calendar, because what we should talk about next is that we are going to get tomorrow morning this labor report, which I don't think is going to be so hot. You heard from Hassett today speaking about labor probably neutralizing a little bit rather than growing. So that's a little bit of a warning sign. And once again, with a lack of clarity here, the Fed's probably going to look at this data and say, okay, if there's anything that's even remotely fine, we're not going to cut, right? So that'll be a big tell tomorrow morning at 8:30. Remember, you want strong labor data, and that will really prevent the Fed from cutting. And if you get weak labor data, that will entice the Fed to cut. Maybe those odds shift back over on our Fed Watch tool to more of a 50-50 coin toss. But as of right now, looking at about 67.2% odds of a pause, keeping rates unchanged in the next meeting. Let's rip through the remainder of additional indications here in the back half of the show. What do we see in the credit spreads right now? Continuing to signal a bit of volatility out there. When credit spreads widen, generally it's a sign of risk off as well as volatility. If we take a look at the HYG in isolation, you could see, and let's just drop in our SPX down here for a nice easy comparison, they've been pretty much moving in sync as of right now. So tomorrow should be interesting to see if junk gaps up and then rallies with the market. And what would be notable, right, is if you take a look at this, let's just come in from this high to this high. You could see that on the SPX. Look at how much steeper this is. If the HYG cannot take this set of highs out right here, roughly around like, what would that be, 80, 70, and the SPX can, and it gets over this relative high over here, you're just going to be, it's going to be a much, what would you say? You're just not going to be able to trust the rally. That's really as simple as it gets. If you mount a lower high in here, or set, I should say, instead of mount would be above. If you set the lower high underneath, and S&P is trying to do this equal high or beyond, it's just really, really tough to trade. HYG has been the absolute canary in the coal mine, right, almost every single time, keeping us on the right side of the trade, intraday and otherwise. So I'm going to put a lot of stock, no pun intended, into tracking where this ultimately ends up. Let's continue along here with total breadth. Breadth continuing to deteriorate on today's session. This is why I don't think Nvidia is enough. Nvidia is one company. Yes, it's going to rise all of the AI names, so to speak, but I'm not seeing it. Look at this RSP down here, breaking down from the big major trend channel, right? This is a substantial new lower low. Let's get into the QQQE. You can see the equal weight NASDAQ breaking down as well, making a new lower low, unlike what we have over here, relative to the bear engulfer. Let me be clear about that, right? Let's continue along to volatility. Let's go VIX. VIX is still elevated up here, signaling, a lot of uncertainty still from that front. VVIX also elevated, coming in a little bit today, but nothing meaningful. Vol futures, these expired today, so we will have to update that for now. Just focus on the gray lines above, and to do that, maybe I'll just try to make this a little easier on the eyes. We got pretty darn close to a backwardation in here, and now we're just kind of sitting in contango on the longer end of the curve. If we just jump on over to the VX futures, we could just take a look at the curve from this point of view. So in still a strong contango through a majority here. There's nothing in backwardation. We got pretty close into the previous day's close, Tuesday's close. We were actually in backwardation at some stages of the curve, but for now, back in a normal view. Let's get on into, instead of, maybe we can rip through, let's go like this, pre-market, oh, come on. Jeez, let's go here. What I want to be able to see is the pre-market data alongside of the normal chart. So we know Nvidia is gapping up. Through the core list of companies we go, Nvidia is gapping up to about in here. Once again, if you want your market maker expected move, it's around 200. Technically speaking, this level in here is 199.29. That's the upper edge of the market maker expected move. Let's go back to our default set. If we spend some time over 191, that would be the pullback level where I'd want to see buyers step up to basically use this as demand below us and then try to retrace at least to that neckline of the double top 1-2. Here's your neckline. That would be at 202.40. If this entire thing fades off and we break below 191 and close the gap all the way, it's probably a big frowny face for anybody who's still long from up here, and I think the AI trade just goes on to continue fading, and the S&P 500 does the same ultimately, right? If we take a look at Microsoft trying to lift after hours on the similar news, on the heels of this Nvidia earnings report, but where are we? I mean, maybe this goes counter trend like this and here, but I would still just look primarily for shorts up against that. This is a major double top neckline on the weekly perspective. If you just go to a weekly chart on Microsoft, I mean, this is no joke. This is absolutely no joke. You've made a weekly lower low. You haven't done that in a very long time on Microsoft. If this continues to remain weak, and once again, underneath 498.50, I don't really see a reason for it to be a big blockbuster trade to the long side in the market. Right, you're underneath a pinching moving average now. Let's jump on into Apple. This is a daily chart now. Apple does have great strength on its daily. I would think Apple's a flight to quality in here. After hours, kind of unchanged. If this can continue the consolidation here, I think over time, when and if the broad market straightens itself out, this is probably a nice long into new highs on Apple. Even if it's a defensive play and Apple gets here as the broad market starts to go sideways, let's say it stops going lower, but it's at least going sideways, Apple is something that I would try to not just blindly trust, but I would be a little bit more trusting, so to speak, in terms of thinking about a spectrum. Lack of trust, decent trust. I'd be over here. Decent trust for Apple trying to make the move into new highs. It would be even better if it had a catalyst behind it. We'll see. It would be better if it was a catalyst that was not a sock for your iPhone. Unbelievable. Let's take a look at Amazon. Amazon brutalized into the daily 200, just a waterfall sell, unable to hold any of the earnings gain. A little bit of a rally here in the after hours. I would like to see an oversold rally on Amazon. Maybe the next catalyst coming in the pipeline here is Black Friday and Cyber Monday deals and just the revenue that they might generate from that. But as of right now, a pretty brutal looking chart, maybe counter trend here, but I wouldn't buy the gap up at the daily 50. I just wouldn't do it. And looking off to the left, right, this is really a congestion zone. The best place to be long, like the best configuration here, which we're not really getting, would have been a sustained extension to the daily 200, right, and then a long off of this after it's so stretched that then it snaps back. The gap up on Nvidia earnings is going to make that a little bit more difficult. The move, so to speak, quote unquote, the move is already what we've seen here. That would have ideally been what you captured intraday from, let's just say, A, the line down here, to B, the previous intraday inflection point and high set on the intraday. Let's go to Google. Great breakout today, at least in the morning. Great, but pretty difficult to capture. Nice move higher here. I think that this brings up an interesting point, right? There was a lot of talk about this Gemini model, Gemini 3, and the fact that it uses TPUs, right? Tensor processing units, or tensor process, TPUs there rather than GPUs, right? So Google probably has the ability to go on to really be a competitor with Nvidia here, noting that Gemini 3 is pretty darn good benchmark-wise, as well as cheaper. The TPUs, I believe, make it slightly cheaper to run inference on, maybe not necessarily the pre-training required to build the model, but to then run it, not bad. So I think Google's got something special here. I think that the relative strength has been apparent over the last couple of weeks. So put my ill-informed fundamentalist hat away, because I'm sure I'm butchering the exact tech specs there, and the tech people will freak out in the comments. That's fine. But let me put my technical hat on in terms of technical analysis. I mean, this has great relative strength. Holding the daily 20, I don't love the reversal off the highs. I do like how it's rallying after hours. I think it's just got a great opportunity to prove it now with clear location to manage risk against at 291.65. I would love to see this develop something that goes like this. Classic Brigade bolt break. Come in, set the high or low, Brigade bolt it back to the upside, or Brigade bolt for continuation into new highs. This has to be a watch tomorrow. It traded huge volume relative to its normal an average 30-day. As a matter of fact, let me just throw this on. Let's go edit studies. Let's go rel vol efficient would be, we want the efficient one. Let's just throw that on. Great. So today, 193% of its average 20-day volume on on the market. So pretty impressive stuff. I would say that a lot of eyeballs are on Google. Obviously, you had Warren Buffett buying the other day. So all eyes on it, and 291.65 big watch. If we take a look at the metaverse, nice attempted rally, but from what? This thing's been in no man's land, completely beat up here. It could go counter trend, but I don't really see it as being a top priority considering how weak it's been. There will be a counter trend rally. It will look in hindsight really nice. I don't think that's a game I want to play right now on Meta. If we look at Tesla, Tesla looks okay. I would think that the overhead supply is still weighing on it in the downward direction. Another reason why, you could say, again, Nvidia earnings are helpful, but a lot of these stocks still don't look great. And, Tesla's one of them with this overhead supply weighing on action here. You're getting a little tighter in terms of the bars on the daily chart, but you really have to clear that. You have to clear it with momentum, and you're probably talking about clearance of 423, something that does this. If I'm just going to get back into the junk drawer, which is this box, and then forget about it. It's like maybe look below and fail, goes to the top end of the range, but the next major break, it has to be there, and everybody's still waiting for that. The other alternative is let this be a bear flag. Let it break all the way down into 365. That would be the best place to start establishing perhaps some lower risk new money longs with risk and reward back up to the highs over time. I'm not saying it's going to identically look exactly like these boxes I've just drawn, but it's very clear where your stop would be, right, if you fail those prior highs. Let's get into JP Morgan, which we've already loosely talked about. Not really much to say, just bearish on the failed breakout at the highs. We can go on over to Palantir. Palantir breaking down under its junk drawer as of right now, trying to get a recapture in the after hours based on the Nvidia earnings. Looking at the daily bar, nice hammer here. I might be interested in the possibility of a long off of a gap fill reversal. I probably don't want to chase it. If you've learned anything in this market over the last couple of weeks, it's just that buying highs and chasing highs really hasn't worked. It worked today on Google. I think that was an outlier event, and it was even really difficult to capture. You would have had to just literally chase it as soon as it broke the key level and not really waited for a nice candle setup. So that's that. Let's go on over to Broadcom. Getting a little bit of love here. I do like Broadcom over this level at 358.25. It's been so stuck in this range. I'm interested to see whether or not this demand is going to drive it higher ahead of earnings under the premise that perhaps they report decent numbers like Nvidia. So 358.25, pullback Brigade bolt higher low above. That looks okay there. I'd keep an eye on that 358.25. If that level fails, just not interested inside of its own junk drawer. Moving along to AMD, even with the competition here, moving slightly higher on sympathy. Daily chart still rough here underneath that 235 spot, so hard to be a mega bull. I would just primarily say, okay, if we can get here, right, maybe we do this sort of dance back to the top side. There is some relative strength on this semiconductor, I must say. If we look at AMD versus, so take a mental snapshot of AMD's picture, right? Then going over to something like Nvidia and take a look at where it is relative to its highs. It's well off those highs with a gap up to about here. So it leaves a little bit to be desired. I do think AMD maybe plays into that growth, becoming and growing into a more AI-related company versus NVIDIA has always been. It moved from that gaming to then AI, of course. But AMD perhaps has a little bit more of that story left, where it hasn't been, the expectations aren't completely blown yet. Anyhow, I don't love the daily. I don't love the location under 235.85. I do think, though, relative to NVIDIA's daily positioning, it is a stronger looking chart pattern-wise. If we look at Robinhood, a little bit of love here in the after hours as well. That's kind of interesting to me, the fact that this moves more like an AI name versus a brokerage name, but you are over that neckline of the daily double top, which makes it a little bit more compelling to the long side. Sellers kind of failing to materialize here. I was quite interested this morning in the inverted hammer inside candle under the lows to close the gap. Never broke down, so at this point, possibly looking for the lower high to step up next, and then a reattempt at some point in the future if the market continues to deteriorate, underneath this 120.50. I do want to run through, I said I had 3 trade ideas at the end. I kind of lied a little bit, but I do want to run through our, the semiconductors watch list that we have over here. So instead of 3 ideas, we're just going to rip through this stuff, kind of see where we're landing. Applied Materials looks really good to me. The reason I say that is because on earnings, it gapped down big time, but then closed up here in the top end of its range as of today's session. And it's continuing after hours, of course, on the heels of NVIDIA's earnings. So I really like the look of this recovery post earnings. If this can stay up here, maybe Applied Materials as a long up and over this set of highs at 241.85 into about 248. That could be a possible breakout trade tomorrow. Once again, I know I just said breakouts aren't really acting properly, but if the market's firing on all cylinders, if we do get that miraculous, if I just go over to the spiders for a second, let's go SPY. You know that situation I was drawing just a moment ago where I said, if the market looks like this, then I'll change my tone pretty promptly. If that's kind of what we're getting, and we could see early signs of that tomorrow, like a gap and go, and just right, 5 minutes into the day, we're looking like that, up 2% or something, then I'm not going to fight that, and I'll probably look to these opportunities like Applied Materials over something like 241.85. We talked Broadcom, ASML getting some love here after hours as well. That looks great. Look at your daily chart, nice consolidation up here. It's kind of loose, but it is nice. Lam Research, I would stay away from this one, especially as a trader. It's not very active. TSM getting some love here as well. I think TSM gapping up and over this level in here is a bit more acceptable, if you will, to the long side. You have the 50 SMA, you're back in this consolidation range. We know that when Nvidia does well, TSM does well, of course, so we'll watch out for that narrative to continue. MU, not as in love with MU. Honestly, I like SanDisk a little bit better. SNDK is the ticker on that. Look at the consolidation up here. Look at the back-to-back hammers, and it's already starting a little bit of a gap up. So I'd opt for SanDisk. Just look at the strength. All you can, just use a simple moving average to help gauge the strength. But there's your 20. If you just go back to MU, notice how MU has overshot now, and it actually had an opportunity intraday on Tuesday to reclaim that. If I just go to like a 15-minute chart here, come on. There we go. You could see this. So here's your overshoot and recapture into what was starting to look good into the close. The close actually ended up horrific, right, underneath that 20 SMA again. So it gave one attempt, and this is why I think the SNDK is better, right? SanDisk is just simply better up here. It's got better consolidation. It's more respectful of the 20. The trend has been stronger behind it. So that's that. Let's continue along. SMCI I would avoid. Marvel I would avoid. Qualcomm's kind of interesting off this major weekly level in here, trying to find some support off of 163 with a daily hammer. Could keep an eye on that. ARM I wouldn't touch with a 90-foot pole. It's a decent range trader, according to some of the traders up in the live squawk in the penthouse office from the morning. So if you want to range trade ARM, be my guest, but I really wouldn't, take this as a top approach into the end of the week. And all these other ones are pretty low tier as well. Intel, perhaps, a little bit of love here off the daily 50. But not much in terms of the overhead supply recapture. You're still underneath that 3610, as noted by that. On semiconductor, this would be a short, if anything. Looks horrible underneath that cliff. Lower highs, descending triangle, underneath all the moving average cluster. I would stay far away from that. Same thing with ADI, really just compressed, and earnings into next week, is it? Yeah, next week. So that is a look through the semiconductor watch list here. And I think that's going to do it for today's episode and installation of the Midweek Market Update. A little bit more laid back, a little bit more relaxed here, having already streamed the entire NVIDIA earnings, just trying to push out this final thought and wrap up on the session. And once again, if you take away anything from the video, it's probably that even though NVIDIA earnings look good and the company performed well, I don't really see the underpinnings improving all that much, specifically in financials, communications, discretionary, enough so to just be a smooth sailing shot back up to all-time highs. So with that said, I hope you enjoyed tonight's installation, a little bit more laid-back attitude. If you did, let me know down below in the comment section or by giving the video a very simple thumbs up. As always, we'll be live every morning at 8 o'clock Eastern time, so tomorrow is no different. We'll see you up in the office bright and early for another episode of the pre-market prep, building you a game plan for all the top opportunities as we head into the bell tomorrow morning at 9:30. With that said, have yourself a green trading week, and I will see you in the next one.